Okay. Well, this is the first time I'm going live on YouTube. Okay. My name is Dheeraj. I am a CA finance student. I'm currently um, my adults have done, and I'm pursuing coaching of C. Rajkumar sir for IDT. Out of nowhere, I got idea of revising the course through YouTube. So today, let me go straight to the topic. Today, I'm going to revise my introduction chapter of GST Module 1. In this chapter, I'll be revising introduction, old law versus the new law, concepts of GST, need of GST, and finally benefits of GST. Okay, introduction of GST. Everyone knows what GST is. I mean, there has been a lot of news about it, and we have heard a lot about it. uh, Goods and service tax, everything is changing. Old taxes got subsumed, and new tax was rising. Uh, Being a little bit technical, GST module, the way the GST law has been formed, it has a dual mechanism. It has shared power both to central and the state government. 31 acts has been formed for states and one act has been formed for central, CGST, Central Goods and Service Tax Act 2017, and the respective states Goods and Service Tax Act 2017. Apart from that, two other laws has also been formed. Those are UTGST, Union Territory Goods and Service Tax 2017, and Integrated Goods and Service Tax 2017. Um, all these four are connected with each other. I'll revise that in a moment. The mechanism is called dual is because it has shared power both to state government and the central government. Okay, everyone has heard that cascading effect has been done with. There was something called cascading effect. There was something called double taxation. I'll be talking about that. I will be revising about that in a minute. Something related to it is there was this problem before in which I could not utilize my, well, let me say it this way. I could not utilize the credit of input tax in my output tax. That was the whole issue. Suppose I was purchasing some goods from Odisha and selling it in Delhi. In that case, while purchasing the goods, I must be paying some more tax to the Odisha government. I'd like those taxes, credit of those taxes being settled. I I'd like to use those credits at the time of payment of my output tax in Delhi. That was not possible in the previous law. Now it's possible. There is a great mechanism. It's technical. I'll not be revising in detail about that today. So that's the part that has been included in the introduction of GST. And before, a lot of portals, websites, government websites were there. For each tax, there was a different website. For each state, there was a different website. And today, only one portal is there, GSTN, which which is linked to every other benefits of GST again. So four things are there. One is CGST, one is SGST, one is UTGST, one is IGST. Let me first of all clarify one thing that, according to my understanding, is something like this. We have 29 states, right? And we have seven union territories. Union territories are something which is union territory is something which has not been acknowledged as the states, and they have their own borders, and those territories are not owned by any other state. Those 29 states. Out of those seven, two union territories has been given acknowledgement. They're not exactly states, but they are treated like states. One is Delhi, one is Pondicherry. So those two union territories are included in the number of states, and the number of states come to 29 plus 2, that's 31, and the five union territories are, are the rest. Excuse me. So when I say SGST, SGST stands for State Goods and Service Tax. 29 states plus two union territories, Delhi and Pondicherry, equals to 31. There are 31 state goods and service tax, just like Delhi Goods and Service Tax Act, Odisha Goods and Service Tax Act, Mumbai, no, sorry, Maharashtra Goods and Service Tax Act. Just like this, 31 of them. UTGST stands for Union Territory Goods and Service Tax Act. For those five union territories, that's there. CGST stands for Central Goods and Service Tax Act. It's meant for the central government. It has acts which are relevant for the central government, which empowers the central government. And the last one is IGST, that's Integrated Goods and Service Tax Act, which has a great role in that mechanism. The mechanism that I was saying in the example, that now we can use the credit of the tax that I have paid in Odisha while I'm selling my products in Delhi. Now that is a great mechanism. I'll be revising that afterwards and not in this chapter. We come to next topic, that's old versus new law. The best and the very common thing that comes into mind when anybody is asked what's the difference between the old law and the new GST, the old indirect tax and the current indirect tax. The basic thing that comes in mind is there was a lot of taxes before, and now there is just only one tax. That is true, absolutely true. There was VAT, there was excise, there was central CST, there was entertainment tax, there was custom duty, there was many cesses. There was many cesses. Now there is GST. Still, there are some taxes that those still exist. For example, the custom duties still exist. For example, excuse me. For example, entertainment tax still exists, stamp duty still exists, toll tax still exists, property tax still exists. That's that. In relation to this point, the point that there are a lot of taxes before and now there is just one tax. In relation to this point, there are lots of other benefits. Those a lot of other differences those exist in the old law and the current law, right? In relation to that point, and that is the origin through from which a lot of other differences arise. Number one would be that there was not lots of taxable events. When I say taxable event is the event in which a person is liable, becomes liable. The moment that event happens, a person becomes liable to pay the tax. certain tax, be it excise, be it VAT, be it whatever it is. Now, for each tax, there was a different taxable event. For example, for excise, it was manufacturing. When you manufacture, you're liable. Uh, for goods and service tax, it was the service. Now, because now there is just one tax, it has come to just one taxable event, that's supply. Though the definition of supply has been made in such way that it covers almost everything in it. If you sell, it's a supply. If you purchase, it's a supply. If you advance, it's a supply. If you do nothing, sometimes it's also a supply. I'll be revising that afterwards, but for now, that's that. Um, one of the very when the taxable event is concerned, one of the major differences that have arisen due to the change in the law is previously when free samples were being given, there was no tax on that. Now, if you give a free sample to some people just to promote your product, even on that GST is applicable. You have to pay GST if condition is or the other conditions or the provisions in uh, which make you pay the GST. You must be falling on those conditions. Anyways, so cascading effect was there. Now the cascading effect is not anymore, but some major part of the cascading effect has been resolved, but some still exist. So okay, all right. Cascading. When you say cascading effect, I mean almost everyone says that. What's the meaning of it? Cascading effect means we cannot utilize the tax credit in paying another. When a tax paid to the government becomes the part of the cost, that's when that's when it's a cascading effect. Just a couple of minutes before I had given that example, I don't think I need to elaborate anymore. There is double taxation. It was there previously, now it's not there. Double taxation is something like tax on the tax. It's like you pay the VAT and then you pay service tax on the VAT. It seems so illogical that everyone was discussing. Everyone talks about this reason, the solution that has been made. Still, some double taxation still exists. For example, the custom duty we have to pay GST even today. Like I said, the majority of the problems have been resolved. Some still exist. Those will be resolved, I suppose. There were a lot of exemptions previously in the old law. I mean, more than probably 500, 600 exemptions. A lot of uh, conditions and a mess was there. Now there are only like 250 around, 240 around exemptions are there currently. So that's one of the other differences. Anyways, just like I said, the in relation to the first point, there are all this other differences. One of the others is the computation, the way the tax was calculated. It was different as per different taxes. Now it has been one place. That's that. It's a kind of similar kind of differences. Multiple tax rates were there. Now those are just compiled into six or seven tax rates. I mean, 0, 5, 12, 18, 28, etc. Well, Karim, firstly, government was proposing to keep just a single rate, but it was not possible because of the vastness of our country. There are so many products, and that cannot be just compiled into one. Anyways, uh, reverse charge and partial reverse charge was there previously on the services. Now the partial reverse charge has been totally struck off, done with, and only 100% reverse charge exists today, and both on goods and services. Previously it was only on the services, now it's both on goods and services. Point of taxation was different as per different taxes. Now it's single. Procedures were different as per different taxes. When I say procedures, I talk about the returns, the audits, etc. Now it's just one. Almost all goods and services were covered under the previous law because there were so many laws, so many taxes. Now, the specific ones, I mean, some are in under GST, some are still in the old law, some are in both, just like tobacco. On tobacco, we pay tax as per the both law and GST too currently. So that's all about the comparison between the old law and the current law. Anyways, the I go on to the next topic, that is concept of GST. GST is just like is an indirect tax, right? When I talk about indirect tax, it's a value added system. When it's a value added system, it's a technical word. It means a lot. Mm. Value added, it's something in which a trader has to pay tax on the value that he has added to the product. Now that sentence has a lot of meaning. Suppose I purchased a goods from a manufacturer. I'm a trader and purchased a goods from a manufacturer for suppose 110 rupees. 100 is suppose the cost and 10 is the tax. I'm not saying it's a goods and service tax. There is no 10% rate in the goods and service tax. I'm just assuming it's an indirect tax. So 10%, 110 rupees. Now, suppose I brought the goods in. I have a profit margin. I have some goodwill because of which I have a demand in the market, and I have a good customer base. And because of that, I could sell that product in 150 rupees, suppose. On 150, indirect tax comes to 15 rupees, and I'd have to sell the product in 165. When I sell the product in 165, I have to deposit 15 rupees tax with the government. But 15 rupees tax exactly will not be paid out of my hand. I can utilize the 10 rupees that I had already paid at the time of purchasing the product, and the rest 5 rupees that I have to pay. If you'll see the sentence that I said, indirect tax is a value added tax. And value added tax is something like in which a trader has to pay tax on the value added to the product. Now, originally the product was 100 rupees. When I brought it in and I included my profit margin, it came to 150 rupees. Now the margin, the value that I added to the product was 50 rupees. Now 10% of 50 rupees is 5 rupees ultimately that I have to pay to the government. They have a, I mean, it's a very famous concept. Everyone knows about it. Anyone who is, have ever been had a touch in indirect taxes, they know about the value added concept. So it is a value added concept. GST also the same way, it treats everything in the same way. Continuous chain of tax credit, the same thing that I was talking about when I was talking about the cascading effect. I gave an example in that. The same thing is also here. Now, cascading effect has been done with. That means the credits can be utilized in other places. Anywhere you go, you can utilize the credits. So the credits now does not, the tax you paid in the inputs, the purchases, does not form part of the cost. You can utilize that in paying the output tax. So that is a seamless flow of credit. Anyways, no cascading effect. Okay, done. The whole tax, the burden of the whole tax is borne totally by the consumer. It is somewhere related to the cascading effect. Excuse me. When the when the tax credit was not being utilized in payment of the output tax, it forms the part of the cost. And ultimately, what happens is the trader or the person who is actually bringing the goods and selling it again has to have a little bit more working capital, because you see, he has to pay 110 rupees here and again deposit 15 rupees to the government again. And that 10 rupees forms the cost, part of the cost. Okay, anyways. Right. Now, the whole burden, the taxes paid, are being borne by the consumer. See, previously what was happening? Suppose I purchased for 110, 100 plus tax 10, 110. I sell it for 115 and sorry, 165. I sell it for 165. Now my profit was something like 165 minus 110, which comes to 55 rupees. If I could have utilized the tax amount, the tax paid for the output tax, then I sell for 165. Out of that, 5 rupees I deposit to the government. I utilize the 10 rupees credit. So the purchase amount, the balance of the purchase amount is 100 rupees, and the balance of the sell amount comes to 150. So profit comes to 50 rupees. Okay, I went wrong in the previous example. I mean, in the first case. If I'm paying the government 15 rupees out of my hand, then my sell value is 150. And from 150, my cost is 110. Now my profit comes to 40 rupees. And in this case, my cost is 50 rupees. You see, the whole burden of the taxes is not actually given to the consumer in the previous law, because my profit was decreased by 10 rupees because it was included in my cost, because credit was not available to me, right? So that's that. So I'm done with the concept of GST. Now I move on to the need of GST. Need of GST. There were multiple taxes that has to be dealt with. Cascading effect was there, that has to be dealt with. Double taxation was there, that has to be dealt with. No uniformity was there among the taxes. I mean, when I say uniformity, that was such a big issue. And there were some cases in which the excise and the service tax were not coincident, falling in a line with each other. There were some transactions, some events in which the service tax was saying that out of this transaction, 60% is service. Now, in the same transaction, the excise was saying that 75% of it is goods, is manufactured. So I'll be so excise was levying excise duty on 75%, considering 75% of that transaction is manufacturing, and service tax was levying service tax on 60% of the transaction, assuming that 60% of the transaction is services. Now, how can that be possible? Right. So in between, you see 35% was just being taxed as both a manufacture and our service. That is basically something very unfair on the face of it. Anyone who has any idea about taxes must be agreeing with this. Anyways, that's about the needs of GST, and it was needed, of course. Everyone knew that. Benefits of GST, the last topic. Benefits: no multiple tax, no cascading effect, no double taxation, uniformity in procedures. Yeah, Make in India. The Make in India initiative has been has great beneficity of this. Well, that's all about this chapter one. I'll be revising the chapter two very soon. This is a good idea, I think. I mean, I'm able to revise all the chapters in a very short span of time. Anyways, thank you very much.